Welcome everyone to this week's Meet and Meetup call. We've been holding these calls every Tuesday at 9 a.m. Eastern, 1 p.m. UTC. This week I have quite a few things to go over on the governance side. I just wanted to note that I didn't mention last week that we've been doing these meetup calls for over a year now, so thanks everybody for joining us for the past year and staying up to date on all things Nexus Mutual. On today's call, I'll start by doing an overview of some of the governance proposals, so some of the snapshot proposals and some of the proposals that are currently on the forum being discussed. The two snapshot proposals from last week that I talked about, and then a couple more regarding the SAFE allocation for the mutual, and then participating as a SAFE delegate in SAFE governance. On the update side, we'll hear Hugh's weekly update on the core teams initiatives. I'll do a week in review of cover sales. I'll go over the active coverage by cover type, and then I'll give a couple community updates on ETHW, and then just a reminder that the Nexus Mutual D app is now in the SAFE app. I'll jump into things and get started by providing an overview of some of the governance initiatives that we've talked about and put up for vote recently. The first one is the buyback proposal to buyback wNXM with LDO and GAL. This one went up for votes last week. We talked about this on the call last week, and this vote was approved. So Vincent had put this up for proposal. This was approved unanimously. So we currently have those LDO assets and the GAL assets, which totaled roughly about $180,000 at today's prices. Those assets will be used to buy back wNXM with a maximum of 0.015 ETH per wNXM. On this, since we've got a few initiatives for buying back wNXM with ETHW and everything, I'll coordinate with the team on the plans for execution, and then I can make an announcement when these buybacks are planned. This year, you can find a link to the snapshot vote to look at that forum proposal as well as the snapshot vote. Happy to see this one vote pass. I think it's a very good use of treasury assets to accumulate wNXM while it's still trading below book value. The other snapshot vote that was up was for a boot node grant to begin the development phase in the ERC 4626 compliant covered vault project. This one also passed with a unanimous vote. So bootnode has been approved for 50,000 USDC and 1,450 wNXM to begin the next phases. The initial payment will be for 25,000 USDC, and the remainder of the payment allocated for this proposal will be sent once they've completed the development side of the project. So the deliverables and the timeline are all in the forum proposal. There's also a link to the snapshot vote, so you can take a look at that and the turnout there as well. There's a proposal on the forum right now that Vincent put up as well. So SAFE has launched their airdrop, and they've launched their SAFE token. And we currently have, I think, roughly between the Nexus Communications multi-sig and the Nexus Treasury multi-sig. He has 139k SAFE tokens, but that's just for the Treasury multi-sig. It's somewhere around 142k SAFE tokens. With this, Vincent is proposing that we use SAFE holdings to buy back wNXM below book value. He's outlined here that if it's worth above 70 cents, that he would propose that we sell 50% of what we can. And if it's worth above $1, that we sell the other 50% for wNXM. Important to note here that SAFE is currently non-transferable. While it's in the claim period, it is non-transferable. There are discussions on the SAFE governance forum about when to unpause the contract to allow SAFE to be transferable. But another thing to note is that the SAFE tokens unlock. It's 50% right away, and then the other 50% will vest over a 4-year period. But Vincent will transition this one to a snapshot vote after review and discussion. What he's hoping to achieve here is soft consensus so that when the SAFE community decides to unpause their contract, we can act on that and allocate that SAFE to buy back wNXM so long as it's still trading below book value at that time. So be sure to check that out. That forum post is also in the thread for today's call. And then I've got a proposal here to act as a SAFE delegate and represent Nexus Mutual and the SAFE Governance Forum. I've got my proposal there. I'm currently a delegate in the UI for claiming your SAFE tokens. And I've got a Twitter thread too where I kind of outlined the benefits here. I think on the mutual side, the benefits are pretty obvious that there's almost $40 billion in assets held in SAFE multi-sigs just on Ethereum mainnet. Allowing people to buy cover to protect assets in their multi-sigs, I think, is another way to unlock another part of the market. So I think working closely with the SAFE community could unlock a lot of value for the mutual. But we also have very similar missions. That's something I highlight in the forum post and in the thread. So we can further the mutual's mission by helping to make cover more accessible and allow people, more people to get involved in the mutual. And we can also help further SAFE's mission to make ownership and identity in the Web3 world more accessible and safe for those who want to participate. This vote will transition to Snapshot on Thursday. So that'll be this Thursday on October 6th. And I'll provide an announcement when that is transitioned as well. So before I move on to Hugh's weekly update, I just wanted to ask if anybody had any questions about any of these governance proposals or the snapshot votes before I move on. Okay, doesn't look like it. So I will move on and I will hand things over to Hugh to present his weekly core team update. Hugh?
Hey everyone, thanks Lee. It's been a little while since I've been on one of these calls. Apologies for that. But we've had a Lee may have mentioned last week, but we had a kind of core team get together in London a bit over a week ago now, which was really positive. As the first time a chunk of people had met, but being all in the one spot just was really good to meet people face to face and discuss some stuff that we're working on and things. So it was really helpful. I thought it was a really positive session, and we got a really kind of clear priorities and focus for the coming quarter and next few quarters after that. And I think that the two main things that we were getting out of that, I think, is V2 is obviously the number one priority, and I guess the kind of consequence of some of that is that some smaller stuff that we might want to try and get done, we're going to really try and deprioritize so that we can focus absolutely everything on V2. It is a pretty massive project. In terms of where we're at, I'll get onto that in a minute, but there might be a few smaller things that require some dev resources that we may postpone just so we can make sure we get V2 out. So that's one thing, and the second thing was more about coordination from a team perspective, but what we're working on, making sure we're accountable, we have responsibilities, objectives, all that type of stuff, including like the DAO, the base teams, and so we kind of have a overall process where everyone has clarity on what people are working on and things, so that we can coordinate a bit better. So I think both of those two major aims were really good. So I guess stepping back to V2, obviously it's really important. It's our number one focus. When is it going to be released? We don't know just yet, but I think one thing that we have realized over the past couple of weeks is that the staking contract is quite complicated, and as even post audit, we've had to look at a few different pieces, and so there's nothing absolutely major that causes huge issues to throw it out and start again or anything like that, but there is a decent amount of work still to go, especially on the testing side, to make sure we get the required coverage and all that type of thing. So the two main outstanding pieces are the staking contract and then the UI, so the front end. A lot of that's the UI is probably further progressed on a large number of fronts, but it also has to come after the core elements of the staking contractor are absolutely locked down. So that's kind of where we're at. I don't have dates or anything, but we're working like really hard on this one because this is the number one focus. So and all of the other priorities that we want to do as a team essentially are reliant on V2 being released. So that's kind of where we are. I guess one of the other major aspects was we spent probably close to a full day talking about tokenomics. Ray was there and presented kind of his, I guess, strawmans and things. And the main purposes of those sessions were to understand the technical limitations or requirements that we needed to work within from a business perspective, as in, we want the tokenomics to work like this, but can you actually implement that from a technical point of view? And so that really helped. And we don't really see any major blockers there in terms of, we solved the one major thing that we thought was going to be an issue, and so there don't seem to be any major ones left. And so Ray's kind of at the moment pulling that together and pulling some the structure into more documentation and stuff, so we can easily present it to the community and people can understand what's going on, because there's been a lot of different potential structures that have been looked at, mainly from all trying to achieve the same outcomes, but more doing it from a different way. And we it seems to be narrowing down on something that makes a lot of sense. But obviously, a wider review from wider members that haven't been as closely involved so far would be valuable as well. So trying to pull that all together in a digestible format. I think there's a couple of things probably worth noting here, more from a kind of higher level perspective. The first is that, given that we're currently under the MCR lock, any change to the tokenomics is effectively going to allocate some of our existing capital to what I'm going to call like exit liquidity. So it will allow, it's effectively going to be some sort of buyback or exit liquidity for existing members that would like to exit. And so that's kind of an important aspect. And there's a question about how much of the existing capital pool you want to allocate to there, and that's kind of one of the parameters that would need to be set. And so that's kind of one element. The second element is that you allocate an initial amount of exit liquidity, but then what you want to do over time is to allocate more exit liquidity if you have still excess capital. And if you don't have excess capital, then you don't add further exit liquidity. And so there has to be a method with which you stream or add additional exit liquidity you kind of break the capital to pool into kind of two theoretical subsections, one being the kind of locked capital and the other being the exit liquidity, and there's the question about how you notionally move assets from one box to the next. And so, for example, if we write lots and lots of business and we need a lot of that capital to back covers, then you don't stream much. But if we, covers sales relatively flat and you still have excess capital, then you can stream more to the exit liquidity over time. And so there's that mechanism as well. So there's a lot of technical points to it that you'll be able to get into in more detail. But I think those two kind of high-level conceptual points that we need to allocate some of the existing capital pool to exit liquidity now, and a method for transitioning more capital to exit liquidity over time. Those 2 points are going to be the key big ones from a philosophical point of view as to how things work now, where all of the capital is completely locked at the moment until the wNXM price gets above book. So anyway, lots of really good progress on that stuff. Ray's doing more documentation and simulation modeling to kind of get it into a good position, and then the plan is to kind of put that together in a straw man and get further community feedback on stuff. And so there's been lots of good feedback so far, but we kind of see this as opening up a bit more widely to some wider experts and things from the community to see what people think. So that's kind of where tokenomics is at. It's a really good progress over the last few weeks. You'll hear more soon. I'll probably just pause there actually, because in case you have questions on tokenomics. Nope. Okay. Cool. Drop me in the chat or ping me afterwards. That's fine. I guess the other aspects are there. There's a lot of work talking to various different operators, either within the crypto ecosystem or outside at the moment, about running syndicates on V2. And so we're having a lot of positive conversations along those fronts. And everyone's kind of waiting for V2 to launch and all the rest of it to see how it works. But some of these things take time to set up, so it's always good to have initial conversations. So there's definitely some teams within the crypto space that are potentially very interested in setting up syndicates. We also know that obviously existing stakers that are quite active on the staking would kind of roll into running their own syndicates. But there are also some external kind of crypto businesses that kind of might fall in the real world asset type or real world risks type bucket that are interested in setting up syndicates. And some of that stuff will take a bit longer to onboard, but the whole model is getting quite a lot of interest from a bunch of people. Two things in particular, two presentations I had, which there were a lot of questions on. I presented to an industry group of all the reinsurers on the life side. Munich Re, Swiss Re, RGA, Hanover Re, etc. And they're asking a lot of questions about how it was structured and how they could potentially use it. So just initial questions and stuff, but very very positive, and they saw a lot of parallels to like Lloyd's of London, and a lot of all the big reinsurers effectively own a syndicate within Lloyd's. So they saw a lot of parallels there. And the other presentation I did was to the Bank of Canada, which is basically the Reserve Bank of Canada, so I guess the Fed equivalent. And there were basically a lot of questions about how it's going to work, how the structures pull together, and how other players within the wider ecosystem might use that. And so, I guess they're more looking at it from a regulatory point of view, but I'm still very interested as to how these decentralized technologies work. And just more generally, I thought that was very interesting because the Bank of Canada in particular have been talking to us, they've been talking to other DeFi projects, they were talking to Liquidity a couple of weeks after I presented. And so that they're doing a lot of work and trying to understand the wider ecosystem. So, but I felt that was quite positive. And they were asking very pointed, direct questions that showed that they've done their research. So they do know what's going on, and they're interested to see how this develops. So I guess those are probably the main points from my side. Happy to take questions on any of that.
Okay. If there are no questions for Hugh, I can move on with the presentation. Just a reminder, you can send any calls in the community calls text channel if you have any. If you do send any there, I'll just pause and let Hugh answer that question when I move on. But I will move on to the last week in cover sales. Just a reminder that all of this data is sourced from the Nexus tracker. There is a link to that in the thread for today's call as well. So if we look at the last week, we've sold just about 4 million in cover, and we've earned a little over 22,000 in premiums, which is a little bit higher than last week. The largest cover buys that we saw one very large cover buy for Aave V2. We saw some cover buys come in for FTX, Enzyme V3, and Uniswap V3. And then a smattering of cover buys that came in for MStable, where we have our Nexus Embassy, Convex Finance, GMX, and then some cover buys for some custodians, and then Beefy and Uniswap V2. The skew between DAI denominated cover buys and ETH denomination for cover buys was flipped, I think, from last week. So a little bit less with DAI denomination, with about 44% for cover sold and about 47% for premiums earned. On the ETH denomination side, it was 56% for cover sold and about 53% for premiums earned. Looking forward to seeing cover buys rise as the APYs and interest rates go up later on, but keep you updated every week with the recent week in cover sales. But you can also find this information in Nexus Tracker by scrolling down on the main page to all covers and searching for historical cover buys as well. I'll move on now to active coverage by cover type. which is also available in the Nexus tracker. But for total active cover, it's roughly about 191 million as of October 3rd. We're seeing about 155.6 million in active cover across protocol cover products, 25.7 million for custody cover products, a little over 7 million for ETH2 staking cover, and 2.5 million for yield token cover. I'll have the more detailed breakdown of total active cover in the newsletter for this week. That'll be coming out tomorrow. So if you subscribe to the newsletter, you'll get that in your inbox. If not, you can look for that announcement on Discord and on Twitter as well. And then I'll just go through a couple community updates. The first one is for the ETH proof of work update. There's a white hat disclosure I'll have to share, and then a little bit of information about some additional ETHW that we've received. So if you look in the thread for today's call, you'll see the contract address for the ETHW. We had a white hat disclosure come through on Immunify, letting us know that there was a vulnerability specific to the proof of work chain. This was disclosed by a white hat, and our engineers worked with that white hat to rescue funds. A small percentage of those funds were used as part of the bounty for the white hat. And then this new address, which I've provided, is where our ETHW funds are currently being held. So the specifics on that I still need to get, and I'll write up a blog post with more details. But from my understanding, the vulnerability was essentially that there's no oracles that work on the ETH proof of work chain. And so it had something to do with some of the DAI assets that were held in the capital pool. Since there's no oracle, some of those were swapped, and it created a vulnerability that was specific to the ETH proof of work chain. So luckily our engineers and the white hat worked and were able to rescue those assets before anyone could exploit that. And then Maple Finance had reached out and let us know that they had some ETHW that they had received from Maple borrowers. There was only a small portion that they couldn't retrieve for us because that ETH wasn't allocated for a loan at the time that ETHW was created and transferred to addresses. But we've received the lion's share of it, so 13,857 ETHW was sent to us from Maple that was retrieved from Maple borrowers. So the total amount of ETHW that we have in the contract that's holding our ETHW holdings is a little bit more than 114,000 ETHW. We're still working on the plan for execution on this. Once I have some updates about the ETHW sale, I'll definitely share those on the community call, on the newsletter, and then make an announcement on Discord as well, and Twitter. And then once we have information again about the buyback from the ETHW sale, and then the buyback with the proposal that was passed on Snapshot, I'll be sure to let everyone know. Any questions on this before I move on to the next slide? Okay. If not, I will move on to the next one. This is just a reminder that Nexus Mutual is in the SAFE app. So if you use a multi-sig, or if you're active within a DAO, or you just hold assets in a safe multi-sig, you can now access the Nexus Mutual D app directly through the SAFE app. You can buy protocol cover for any of your productive assets, and we also have safe protocol cover, so you can protect your assets held in the safe smart contracts and protect them against smart contract or technical risk. The whole goal of having the Nexus app and the SAFE app is to make Nexus Mutual more accessible to all SAFE users, whether it's an institution, a DAO, or an individual who wants to protect their assets in a safe multi-sig. I think this is really important as somebody who is a signer across a variety of multi-sigs. Having things in the SAFE app makes my life significantly easier. So I'm glad to see that the Nexus app is in the SAFE app store. Yeah, so just a reminder on that. I've also got a tweet in the thread for today's call highlighting that announcement as well. But at this point in the call, it's time for the open forum. So if there's anything I haven't covered, if anybody has any questions, or if there's anything that you'd like to raise, feel free to speak up on voice or to drop any comments or questions in the community calls text channel. Okay. If there's no comments or questions, I can move and close out the call for today. Thank you, everybody, for joining us on this week's community call. Always great to provide those updates. As I have updates throughout this week, I'll send out notifications in Discord and on Twitter, and we'll have our newsletter out tomorrow, so be sure to be on the lookout for that or subscribe if you don't already. But I hope everybody has a great rest of their day and a wonderful rest of their week, and we will see you on the call next week.